If you've started playing around or looking at like charts and things like that, you've probably noticed spikes, right? Where you see this high-low range all of a sudden is noticeably different than the others, right? It just spikes up or it spikes down. You know, something's happened, right? And it really is a dramatic thing compared to the other price bars that are preceding it. And it kind of gets your attention because it's just dramatic, right? It spikes out there. Something has happened with the price where there's, you know, the range has gotten really broad, really fast, all within a day, let's say on a daily price bar. And you want to ask yourself, when you see spikes, is it true? Is it a true reversal? Has something really dramatic happened? There's a big event. Something has happened that is going to cause that security to trend in a different way. Is there a reversal coming around? It's going to just something dramatic has happened, or is it something that's more temporary, like a panic or a rumor that came out that's going to correct maybe in the next day or so? You know, where it's like this big spike, and then everybody's like, much ado about nothing, right? So those are the kind of questions when you're looking at spikes and when you're applying your technical analysis to a spike. Is it true or is it not true? And you can see them on a chart. Like, let's look at our chart again here, and you can see this big red spike to the right, right? So you can see that this big red spike. And what do we know from learning about our price bars? We can see that it opened on that particular red spike there. It opened up pretty high. In fact, it opened up much higher than the day before. You look at that black bar right preceding it, you can see where the close was, and all of a sudden, the price spiked way up, right? But then why is the bar red, indicating it was a down day, when it spiked way up? Well, what happened is it got way up there, something where people are anticipating something or something was going on. All of a sudden, traders figured out, oh my gosh, this is not good news. This is actually really bad news. So then it went spiking all the way down. And that's where you can see where the closing is on that red bar to the right, where that's the closing price is well below the previous days, the previous days open and close. So it opened real high, something was going on, people are trading it real high, and all of a sudden, boom, and went way down. And I'm not sure why, but this is a great example of this particular one where it went way down and closed way down. Also, you notice that the volume bar, the bar on the kind of the bar on the bottom, all of a sudden also spiked up too. So our volume increased. There was a lot of trading activity. Remember, as we know, if there's a lot of volume, that can be more of a confirming event that something real might be going on. And usually when you see spikes, you're going to see, that horizontal bar get, pretty high because something's happened and causing a lot of things, so a lot of action on that particular security. Now, what we'll want to do is to figure out, what's happening here, and do we want to invest in it? Now, maybe there's some news and we say we believe in the news, and so we're buying or selling based just on that news. But if we were looking at technical analysis and we're looking at trends, we might say, this is really getting wild here with this spike. It definitely closed down. I might want to be watching early the next day with the opening. Where does it open the next day and what might be going on, so I can see if there's a trend, going on. It looked like previous to that there was somewhat of an uptrend, going, definitely at least for a couple of days, it was going up as far as, going up. Well, actually 3 days in a row it went up, but then it went way down at the end after a big jump up. So that's a spike. That's what a spike might look like. And then if we look at it, like, well, what did in fact happen with this? This is real stuff that really happened. And when we look at that, we can see like, oh, the bars turn black, so that means their prices are going up. There's prices going down in the red. Volume went down, but you can see after it closed way down in the red bar, or red price bar, it opened just a little bit higher, and then through the trading day, it had a more normal or narrower trading range and closed up higher, actually significantly higher. And then looks like it started a little bit of an uptrend. You can see the closing bars or the tick marks on the right. Then following day it went up a little bit, then up a little bit more, and then up again. So, something happened to cause a reversal for one day in that previous trend, but it looks like it got back on an upward trend. So, that's how we could evaluate that spike. Now, if it went the opposite way, the spike could have proven to be true as far as trend reversal, and we're now going to have a big downtrend. And if we just expanded it further, going back in time, you can see that big red spike in the middle. We had our little uptrend. And then what happening is we then went into a downtrend. But all these things that are happening, we would have been using our technical indicators to identify when these trends are forming and when they're not forming and when there might be reversals. So we're getting in and out at the appropriate times is the idea behind this. But be aware of spikes because, you know, there's something that's really dramatic, something dramatically is happening.